Pete here with the Traders Club. Welcome to the market update. Keep in mind, as I record this video, I'm actually recording in the intraday, so market should be open another 2 hours as I record this video. S&P Spider is currently trading at 258.50-ish or so. So today we're going to be talking about Spider, Qs, and Diamond. But I first want to talk to you guys about this weekly chart on the S&P. I've been talking a lot about this chart. I've been tweeting about it. I've been writing, blogging about it and things like that. So my recent blog, obviously, we talked about a blog post that I made. Where is that? So if we go here, this is my, yeah, there you go. So this is my blog at twotradersclub.com. If you just click on, or if you want to just Google S&P 500 4,000 in few years, I talked about, you can go ahead and read that. You know, why 2000 is not like 2008. People are saying the same thing in 2016, how 2016 supposedly like 2008, but it wasn't. And they're going to be continuing to saying that when 2021 comes around, they're going to be saying something similar. And you know, I've been reading a lot about how, hundreds of hedge funds closed their stores in late 2018. I talked about why that happened here and why we saw such a fast correction in late 2018. That fast 20% correction only took 3 months. 3 months to see that kind of correction. Usually, for 20% corrections to happen, last time when we saw 20% correction was actually in 2011, right? We actually had a 8 months topping pattern, and then we saw 20% correction. This one just straight down. So kind of explained why, why we saw that fast correction. It was tough to, it was tough for a lot of people to prepare for that, and a lot of people actually got trapped. And just quickly, I talked about how, a lot of people missed out on this move, right? Because so many people are preparing for a crash. So a lot of people missed out on this move. Even if they did profit from it, they weren't full on bullish. They maybe scalped it here and there, you know what I mean? And so even a lot of bears, who missed out on this move, last money shorting it. When this thing came down and they thought, aha, there's the bear market, right? And thought this thing was going to coming down and start crashing down. Well, they didn't see that. We saw about 60 months base. And when this thing went ahead and made a new all-time high, what happened was a lot of people started chasing it somewhere here. So, including the hedge funds, hundreds of hedge funds were mostly very bearish in 2016. When you're extremely bearish, like when you're like looking at the market, you're fixated on the idea that why the market should not be up this much and why we're due for, when I say crash, I mean bear market. They're talking about recession, right? Recession. Keep in mind, S&P from here to here or here, that's about 60% move. They're waiting for about, 40%, 55% crash while the S&P moves 60%. Right? That was a completely wrong call, but it is tough to chase it when you have such a, bearish connotation and you have such a bearish thesis on the market. And when I say bearish, I mean they didn't mean just bear. They mean like a recession and a bear market, like the market actually getting into like 40 to 55% crash. It is tough to completely change your views and completely go a full on bullish. And this is what I've been talking about last couple years maybe. Once you miss your entry, it is going to be very, very difficult to go on full on bullish. Because, how are you going to start going full on bullish after this move has already made? If you are very bearish in 2016, well, you're now super bearish in 2018 and 2019, right? But I think what happened was when this thing, they thought maybe bear market was going to start here. That didn't happen. And then when this thing kind of went up and made a new all-time high, I think a lot of people start chasing this up here. You know, not only hedge funds were chasing it there, and that, you know, just pretty much a lot of people, a lot of cash people, a lot of bears even turned bullish. I start seeing that happening. And then a lot of hedge funds who didn't make any money in 2016, 17, 18, probably lost a lot of money trying to short the market or trying to use, you know, instruments like, you know, maybe going long on bonds or going long on commodities such as gold. I mean, none of those instruments made money in the last couple of years. Only thing made money last couple of years were stocks, right? And so they full blown went bullish here, and a lot of bears who are pretty much bearish throughout the last couple of years, they started turning bullish, and the market just came down on them and completely wiped them out. This is one of the reasons why, you know, 100 hedge funds closed in 2018, and you know, why we saw such a fast correction, because, you know, market does not like that. I mean, you start chasing, market has its way, its magical way to come behind you and knock you out cold. And that's kind of what it did. Like, again, I mean, even when we saw these 15% declines, man, it was a lot of grindy move. It took years, so maybe 9 months. Let's see. Yeah, I mean, pretty much 10 months grinding before 15% correction. We saw about 8 months of topping pattern before we saw 20% correction. 9 months of sideways before we saw 15% correction. This thing came out of nowhere, and nobody was anticipating something like that. Only one of the main reasons why is because everybody started chasing. You can try to put all these fundamental geopolitical issues, well, because of this, because of that. None of those things is why it's happening. It's because, you know, once you start chasing like this, and market has is a unique, in a magical way, just you know, completely wiping them out. And so I think this is one of those decline that is very, very difficult to, you know, forecast, and very, very difficult to time it. And if anybody tells you they call this whatever, they trust me in this. They've been saying the same freaking thing since 2015, 16, 17, 18. All throughout this move, they've been saying the same thing. They lost so much money trying to call, and then finally when this happened, they'll like, oh my god, I told you so. Yeah, after 30 years later, yeah, right. Anyway, so, but I think 2018 or 19 is going to be a great year. I'm forecasting 25 to maybe even 35% this year on the S&P. At minimum, maybe 20%, but I think it's going to be a great year this year. I think it's going to be a great year next year. And on that blog post that I wrote, obviously I'm targeting 400 in 2 to 3 years. And so we'll keep an eye on it, and we'll follow each week. We'll talk about it. But let's start with candlestick analysis. I don't always do candlestick analysis, but this is something special because you don't see it quite a lot. But this is what you call you know, three white soldiers. It's not perfect. Textbook three white soldiers. You douchebags out there, you're gonna come and say, well, that's not a textbook three white soldiers, okay? Well, this candle is supposed to be a full body. Yeah, there are people like that, but the characteristic is definitely there. Something similar to here, right? This definitely was not a three white soldier per se, but it has a three white soldiers properties, characters, meaning we got 3 weeks of advancement after the decline and at a major low. So we got, well, first we got this is actually 200 VWAP, right? 200 VWAP on the weekly chart. While we have 200 VWAP rising, we retested that. We saw 15% correction. That's in 2016, early 2016. While the stochastic, this is my specially reconfigured candlestick there, and we saw this thing coming down, and you can see we saw that cross, and we saw that retest, and then we saw that three advancement of this weekly chart, a weekly candle. So that's not a textbook three white soldiers. You know, textbook three white soldiers suggests that you want to see full good looking three, you know, candles. But I mean, when was the last time you see everything happening perfectly in the world, in the world of the stock market, right? So you have these, what's really important is not picking up these terminologies. You know, that's what these nerds do, but understanding what's really going on with those candles. So that's kind of what we're seeing here, is a 3 candle advancement of these candles representing 3 white soldiers properties, and I would just call it 3 white soldiers. A lot of times when you see 3 white soldiers, and it may continue grind higher. And last time when we saw that, and this is definitely a congestion zone right here, right? So that was a level, right? And that's what we have a congestion zone here, which is 280, 270 or something like that. But last time when we saw 3 white soldiers, this thing went all the way up to retest that highs of congestion zone. And you can see this was the election, right, before Trump took the office. So you can see we saw that resistance there. So we held there before the election. There were a lot of jittery action, there's a lot of nervousness, and there's a lot of uncertainty what's going to happen, if you know, all that. So that's kind of what this was. But really though, after this 3 candles there, we saw advancement 1, 2, 3, 4, 5, 6, 7, 8 weeks of like really grindy advancements, right? And that's really how the bulls move though. Bulls move in a grindy way. I mean, you can see the biggest bullish pressure we've seen in 30 years, which was, you know, the second half of 2017. Look at how it moved, just like slightly tiny moves, and then the big candles comes later. A lot of times that's how bulls work. They usually start with these grindy moves, and then later they get a big move. And a lot of times when the big move comes after grindy move, that's usually the top. The bears though, they usually like to bring it down pretty quickly. That's why you see this big bearish candle. This is one of the main reasons why most retail traders and unseasoned, untrained, and these newbies are bearish. You know why? Because it seems like bears are always winning, even though they're not. Because it seems like when bears come, things move fast, right? These people are very impatient. These people want to make money quick. They got this poverty mentality. How can I make money this week instead of looking at next several years, right? Wealthy people always looking for how much can I make next 5 years, next 10 years? How can I accumulate? How can I quadruple my account, my wealth? That's a wealthy way of thinking, right? They don't mind not making a lot of money now, but they want to make huge money later. The poverty mentality is always want to see how much they can make money this week and this month. This is one of the main reasons why these short-term traders and these newbies, these so-called experts, they're always scared, and they're usually always trying to short the markets because of that fact, right? They don't have the patience. But when was the last time you heard any billionaire, somebody who actually accumulated wealth in the market, was a day trader, was a short seller? You see what I'm saying? So this is actually good looking candles there. I think we're going to continue to grind higher to about 280. And then potentially we're going to hit with that some congestion zone here, and then the price start to contract a little bit there. So let's actually go to daily chart here, and let's talk about it here. So this is a daily chart, and obviously this is important level. This is a prior resistance, right? So this, or prior support. So this is what you call a pivotal level. This is what, you know, became support, and a lot of bears are gonna think that this is gonna be a resistance, right? So, and this is kind of what I was saying in my recent tweet, that V-shape is most difficult time to entry, because you never know when the next pullback is gonna come. I mean, it came down here. Are we gonna come pullback, go up a little bit here, and then a pullback? Or is it gonna be coming down and go up here? Like it looked like it was gonna here, and then a pullback? Or are we gonna go up and then do this and then come down and then do that? Or are we gonna go up, come down, and then go up maybe to here and then come down? This is why V-shaped reversal is always most difficult, and especially when the market is grinding like this. It's just not making a big move, big gap ups. We're just grinding and grinding. While the shorts and the bears who looking for a major market crash and major market recession here, they are going to think that the next decline, next lower high is gonna come any minute. So they're gonna start to keep adding on the shorts, you know. So you can see, and in the market continues grinding out. What I think is gonna happen is we're gonna keep grinding like this, and just little tiny moves like that. We do have little gap here that is coinciding with that 50 That's 50 EMA, and so I think we're going to see a little bit of contraction when the market gets up here, and that's a prior resistance or prior support as well, coinciding with the gap, coinciding with the 50 EMA. But really the 280 and this level is going to be hectic area. We got the 100 there, 200 there, 50 there, the gap there. There's a lot of congestion zone here, but I think we may continue to move higher, a little pullback here, a little pullback there, and then potentially retest 280. If the market really want to make things difficult for the bears, we may continue to move higher above it and then finally retesting it, getting below it, and then something like that. But again, I'm getting ahead of myself, and I've done my long-term analysis why I believe this is going to happen, why I believe this is a bottom, right? And this is the time that you're going to see almost probably everybody else. I'm probably the only one, just like in 2016. I was the only one who was full-blown bullish in early 2016, as you know, right? And right now, any person you listen to, anybody you listen on YouTube, their majority of people are bearish at this point, right? And even if they're not bearish, they're questioning themselves as to, well, it like looks like 2008, man. I don't know. Like, you're gonna hear some stuff like that because those same people were questioning the same thing in 2006. Right? Well, 2016, like, is that going to be like 2008? Or, you know, some people say, is that going to be like 2000, you know? I don't believe that, and I love it when I'm all alone. I love it when I feel like I'm against the world. That's why I seems like I always make the most money when I'm against the whole world. And 2016, 17 was a great year for me. 2017 was best year in my trading career because, again, I was full-blown bullish since early 2016. Right now, I'm on full-blown bullish on the S&P. I mean, in the whole stock market, I've been buying stocks. I've been accumulating 2020 calls here, and so I've been adding on to stocks that I already hold. And this is gonna be a great year, I think. And I think we are bottoming here. And I don't know when the volatility is gonna return. Nobody does. But my hunch is we're going to continue to grind like this. And that's what kills the bears. That's how a lot of times the market tends to, slowly kill bears. Because if we see like a big gap up, like a big bullish move, I think it's going to scare a lot of bears out. But when we see these tiny little moves, they're going to say, well, any minute we're going to see the super bear strength where this thing just comes down like a big down day. But I have a feeling that we're going to continue to grind higher. We may probably get into about 280s or so. So some of these levels to watch. And I think just a short term, I think 256, 254 level to watch. The worst case, and I don't think it's going to come, but the worst case scenario might be this thing coming all the way back down to retest lows. But I think that's a very, very slim chance. I don't think we're going to see that. I think we're going to see a V-shaped reversal here. And then we're going to continue to get up here and probably retest some of these levels. We're going to slow down a little bit at 50, but I think it's going to continue to move higher. And we're going to continue to see, like I told you, like I've shown you the weekly chart, I think we're going to continue to grind higher like this manner, this slow, grindy way for the next several weeks. Let's quickly look at the Qs here. Qs advanced pretty well, as you know, if you follow my journal posts, the Qs I've always had, since I actually got into Qs, I've only bought 2020 calls, 2020 January calls. So I'm able to I'm able to try to turn things around on the Qs. But on the Diamond, my 2019 calls in January, because I do have some of those on Diamond, are going to probably going to expire worthless. And I'll journal about it once that happens. But I do own quite a bit 2020s on the Diamond. But on the Qs, I have all 2020s, thank God. So I can able to gain my, recover my losses as we see improvement this year. Qs actually did see, this is a congestion zone here, right? This is important level. We're well above that now, and we made that new low. So I think this is this could be, if we do see this as a trap, I mean, I think a lot of people are going to be looking at this as a head and shoulder formation, right? And a lot of people are going to be looking at this. And nowadays, almost every single people can get a free charting software with their brokerage firm. So everybody's going to be looking at that. And these amateur chartists and these amateur technical analysts, they are going to, you know, they learn one thing. They're like, oh my God, that's head and shoulder formation, right? So I think what's going to happen is we're going to potentially go straight up from here. Maybe just doing something like that. This may be the bear trap. You know, we may see this thing continue to move higher. I think Q is going to do really, really well this year. And even looking at weekly chart on the Qs, we are at that extreme oversold vicinity, very, very similar. You can see right there, and we just crossed back up. So I think a lot of people are looking for that head and shoulder play out. I think everybody's going to be looking for that lower high for the commencement of a bear market or bear a downtrend. But I'm betting that we're going to continue to higher, and we're going to maybe throw an inverted head and shoulders, left shoulder, head, right shoulder, and then we continue to rise higher. And that's what I'm proposing. That's what I'm thinking. That's what I think that is going to happen. And I think a lot of people are going to miss out on a move, because I think the market isn't going to give perfect this setup where people can jump back in. I have a feeling that a lot of people, just like what happened in 2017, so many people are scared in 2016, and so many people are scared and with the uncertainty, Trump taking in office, so many people missed out on 2019, and we had the biggest bullish run we haven't seen, bullish buying pressure we haven't seen in 30 years, which I talked about it on a previous special report video that I did in early 2018, right? That we had the buying pressure we haven't seen in 30 years. Because I remember, you know, in 2017, so many people were anxious about it here. Like a lot of people thought that there's gonna be a big crash or correction coming here, and then most people missed out on it. But people who missed out on this move all throughout 2016, right? They were nervous here when the market wasn't really trending. I mean, it was still trending in higher lows and higher highs, but a lot of people are scared here, and then they missed out on this move. That's kind of what I'm saying. Even with this decline, I think a lot of people are still very, very nervous. And a lot of people are maybe even staying in cash, waiting for a better setup to play out. But I have a feeling that this year, we're not going to see a perfect setup. Most people are going to miss out on a biggest move again. I believe, and that's how the market moves. I've been talking about that. This is how most people miss out in a most biggest bullish era ever in 1990s, 2000. I've shown you that chart before. You look at NASDAQ, you say, "Oh my God! If I put some money in 1990 to 2000, I'll make a whole lot of money. I'll be a millionaire by now." You know, people say something like that, right? If you actually go back and study it, even with the biggest bubble ever in history on the NASDAQ, right? There were 15-20% corrections every couple years or so. You really think that people just completely rolled that all the way up? No. Only some people who know what they're doing made money through it. A lot of people got scared every time there's 20% correction. Oh my God, the crash is gonna come. Can't go any higher, man. That's how the market leave majority behind. Once you miss that trade, man, it's because you thought that crash was gonna come in 2016. There's no way you can able to go full-blown bullish here in 2019, even with about 20% decline on the S&P. And what's gonna happen is a lot of people are gonna stay in cash or whatever. They're gonna wait for a better, you know, quote unquote, a safer signal. Market is not gonna give you that. Just like market didn't give us perfect signal before this thing had a proper topping pattern, right? Before this thing coming down, or proper some consolidation or move before coming down. This thing came out of nowhere, and opposite is gonna, you know, opposite scenario is going to happen where it's going to go up out of nowhere. That's kind of what I'm thinking, where there isn't going to be a proper set. It's going to be a perfect, quote unquote, perfect, or, you know, signal for you to, okay, you know, green light, let's all go full blown. It's not going to be like that. It's going to go in a way that is going to make a lot of people still scared and terrified of the market. And something is going to happen where, and then when this thing actually starts to get into an uptrend, you know what I mean? When you think it's a green line, like, you know, green light, let's say, when most people think that, oh, there's a green light, but think about it, what happened though. That's what they thought in late 2018, you know, like after the summer, the late summer of 2018, they thought that was a green light, right? They thought this was a green light. And then, you know, market came out of nowhere, right? So I think something similar is going to happen in the opposite way now, that it's not going to make things easy for anybody to just start jumping back in full blown bullish and take advantage of what's to come next couple of years, right? I've been full blown bullish since 2016. I've been owning multitude of stocks since then. And so you know what I mean? And a lot of those stocks has advanced, and I've been adding onto it with the recent decline. And I'm intent to write this, and especially I wrote that blog post a couple days ago, into 4,000 on the S&P 500, 400 on Spider in next 2 to 3 years. I think it's gonna come in 2 years, but you know, it might lag a little bit. But you know, so we'll keep an eye on that, and we'll, you know, follow up on that analysis, and we'll take this week by week, and we'll go from there. Let's look at Diamond. I'll let you guys go. Diamond, same scenario here. This was an important pivot, right? We gotten above it, and we're just hanging around in that vicinity. So pretty much same scenario. Weekly chart, extremely oversold. You know, we're retesting the moving average, the 200 VWAP, and then the oscillators that oversold. We were jumping back up, and where this thing just, I think it's gonna V-shape higher and just all the way back to about 260, and that's what I'm thinking. And I don't know, maybe everybody's gonna expect this to pull back and do this, so maybe it's gonna go just keep maybe little pullback, and then, you know what I mean. So like I said, I do not think that the market is gonna give you that easy, like all green, like, you know, this is all like, you know, green light to this is time to go. I don't think it's gonna give you that. I think it's gonna be difficult to time it. And so the market never gives you a perfect entry level, especially after this kind of decline. So yeah, so hopefully this analysis has been helpful to you. I spent more than I anticipated today, but there's a lot to say, and you know, I wanted to just help you guys out with, especially if we have a similar vision in the long term. Like, we're looking at things long term, right? And so that's kind of what I'm here for. So, well, you guys have a wonderful weekend, and good luck trading next week.